I want to bring in Bulltick Capital Markets, their chief strategist, Kathryn Rooney Vera. And let me just start with this, Kathryn. You are one of the best at tying in geopolitical events with our stock market. What exactly would hurt the market in a few minutes, and what would be okay that the market can continue perhaps to rally?
The market would be okay, Charles, with some minimal escalation. In other words, Trump leaves room for future escalation. He goes with visa restrictions, or he goes with sanctions to some degree on the financial sector in China. The nuclear option, Charles, would be something that the market would kind of freak out about, and that would be cutting Hong Kong off from the U.S. dollar, cutting off that special relationship that Hong Kong enjoys with the United States. And I think it would be counterproductive in a sense too, Charles, because if we think about it, since 1997, in fact, Hong Kong was 18% of the Chinese economy. Today, it's only 3% of the Chinese economy. So sanctions on Hong Kong would really not impact to a great degree China.
What about the trade deal? It feels to me that the street would like to be able to interpret what we hear in the next few minutes as not harming the trade deal. More saber rattling, some push and pull between both nations, but the trade deal still intact. How important is that?
I would be really surprised if the president talked about curbing or retracing on the trade deal. That would definitely cause a major slide in the markets. And I expect that not to be the case in this first round of sanctions. But let's face facts. China is in an economic slump, so they are unlikely to comply with the trade deal, which required purchases of a large array of U.S. products. So I think for all intensive purposes, Charles, the trade deal in effect is weakened because of the economic slump.
Although I've seen recently where some of their ag purchases have been through the roof, not at phase one levels, but certainly higher than they've been in the last couple of years.
Sure. Yeah, I think the intent is there. I mean, it behooves both parties to have a trade deal that functions and a relationship that functions. But there is a pushback, and it's not only going to come from President Trump. You're going to hear it from Democratic candidate Joe Biden as well, pushback with regard to China, because there is the population feels a sense of accountability that must come with regard to China's role, both with the COVID spread and unfair trade relationships.
And, of course, what they're doing in Hong Kong. Let's zero in on this market because this has been a really fascinating week. We've seen all kinds of attempts at rotation, specifically earlier in the week when the yields got over 7% in the 10-year, bonds into stocks, from defensive stocks into cyclical and value. And I think it's great. But I see some folks on Wall Street who say, the financials can't lead this market higher. What do we want with respect to composition of a stock market rally?
Well, something has to give, Charles. It has to be either multiples drop precipitated by a collapse in the numerator, which is prices, so price over earnings, or you get a surge in consumer confidence of the likes we've never seen in American history. Because right now you have multiples at 24 times earnings, and you have consumer confidence through the floor. So something has to give. We can't continue at the current trend. I think that the markets are anticipating a very ferocious rebound, the consumer coming back in force. And I suspect, Charles, that the market could be disappointed with the velocity of the recovery and the amount of uncertainties that still exist.
I read your letter that came out yesterday, though, and you did make some cases, bull cases, though. And again, I think everything we're talking about with respect to the consumer, you got to add an asterisk next to it, right? Because we never deliberately shut down the economy. But we learned today that the American households are sitting on $6 trillion. If they ever feel compelled to unleash that, that could be pretty strong.
Absolutely. And I think that we should expect the consumer to come back in force. I just wonder if it's going to be right now with the government even reopening, only allowing 20% of restaurants, to have at capacity and the like with stores. So consumption will recover. I just don't think it'll be in the next few months. I think it'll be more of a 2021 story. But without a doubt, Charles, there's a lot of pent-up demand. And I do believe that the U.S. consumer will come roaring back. What could take the markets higher? A vaccine on the very near-term horizon. I think that would push markets higher, and ongoing economic data that beats the very, very low market expectations.
Before I let you go, have you changed? What have you changed with respect to positioning? I mean, is there something new that you're looking at? Again, we talked about rotation. For a couple of days, financials came to life. In the last 2 days, they've fallen completely apart. For a while, their energy matters are soaring, come back, and now that's falling apart. And it feels like default market falls back to tech, communication services, and then a smattering of value names in industrials and materials.
Well, and it has to be. Tech is such a whopping percentage of the S&P 500. But I do think that the market is far extended beyond economic fundamentals, and I am advising cautious. You know me, Charles, I'm usually very bullish, but I am advising caution at current levels. I don't mind recommending clients take cash and increase cash position and start to take some earnings.